Of Macro Mondays. We are going to jump into a bunch of topics related to what's going on in New Zealand markets and the macro picture here, but also then globally and what's going on in the US, especially the earnings season that is continuing on, amongst a couple other topics which I think are quite interesting. So let's just pop up my screen and get going. Let's start off with the rate cut last week. So last week, New Zealand dropped rates by 25 basis points, dropping the overnight rate in New Zealand to 2.25%. That is quite the delta from what the overnight rates are in the US. And maybe you would have expected, given the continued cutting of rates, the New Zealand dollar to get weaker. However, on that cut, you actually did see the actual currency, the New Zealand currency the New Zealand dollar did get slightly stronger against the US dollar. So the US dollar currency did get weaker against the New Zealand dollar. So a little bit of a surprise there, perhaps, if you were to say, oh well, if they're cutting the overnight rate, that means the currency should be getting weaker. But it's obviously already been historically weak and on a kind of a pretty poor trajectory when you're looking at holding New Zealand dollars. It's been pretty rough against the US dollar. So, moving on. The equity market was up 3.7% last week, and it was a short week with low volume as well. You have to consider that it was Thanksgiving, and much of the volume would have likely been driven by retail. And from an earnings perspective, there weren't too many big names last week. There's a lot more action this week in the earnings kind of environment. You have... Oh, let's just change my layout. Sorry. There we go. You have a lot going on this week. So, equity markets, or the S&P 500, the SPX, is only about 1% off of its all-time high. And, you know, I guess where we're at in the year, you would expect there to be lower volume as we head into the holiday period. And it'll be interesting to see how we kick off next year once institutions get back into the swing of things and give us their outward-looking view for 2026. So we're going to start to see what people are thinking when it comes to the institutional names like Goldman and JP Morgan and those large players, and how confident they are going into next year. You might see some tax loss harvesting as you get into the end of the year, especially on weak names that have been down quite a lot throughout the year. And then we'll see if there's I guess, factor rotation next year. Obviously, tech and the AI trade has been very strong this year, and we'll see if it continues on to 2026. From a headline perspective, and we'll get into it in a minute, obviously there have been more and more negative comments around that AI trade in the recent past. So if we move on to Bitcoin, Bitcoin from the high, it's had around a 36% drop from its all-time high, and it's actually bounced back 12.5%. In typical or historical drawdowns in risk assets, which equities are correlated with that, Bitcoin often leads the move down. So we have a bit of a disconnection here where we have Bitcoin down 36%, but the SPX is only under 1% from its all-time high. So that's definitely a relationship to watch. Gold has held up really well, and it's bounced back and recovered much of its drawdown when it had that huge move in October. And if we just take a quick look at how much it's come back, we're looking at 8.64%. So, I guess if you were to combine the view of Bitcoin and gold, you would say that perhaps that continued devaluation of fiat trend and dynamic may still exist in the market, or you could also say that speculation around that trade continues in the market. So definitely an interesting dynamic, and yeah, we'll continue to watch and see what's going to happen next. So there's a couple things going on this week. There's a bunch of earnings plays, a couple that we thought were interesting and we're looking at just because of our interest in energy and this kind of long-lasting now AI and transformation, I guess, trend and trade. So you've got all the normal names like there's your Snowflakes and MongoDBs reporting. You've got your GitLab reporting, CrowdStrike. Some of these internet services now are so systemically important when it comes to the internet being up and running. For example, CrowdStrike, I believe the other day, took half the internet down when it had an outage. So these are important companies. They're reporting. They are, I guess, what you would say, high beta names. They are often, on a valuation perspective, considered quite expensive. With the forward, the highest forward PE of the group would be Snowflake, followed by CrowdStrike at both over 100 on a forward PE perspective, and both over 20 on a price to sales perspective. So important to note. The short ratio on them is quite low at 3% and 4% respectively. Price targets, both of them remain below Wall Street price targets. So these are really important names reporting throughout the week. It'll be really interesting to see how they all perform. But let's move on to Google and NVDA. So this, I think, has been the talk of the street for really all year. I know that we've talked about it on the Ways to Wealth podcast, how, my view personally, obviously not financial advice, but Google, irrespective of its stock price, seems to be one of the best businesses in the world. They have some great IP, they have some great business units. Our business runs off of many of their products. Most of our businesses are connected to at least one or two of their products, and they've got some great innovation going on in the hardware space. And this is really topical with their TPU and how that's competing with NVIDIA, and how Gemini 3 has been an absolute kind of godsend, I guess, for Google, and I guess its share price. It's almost at its Wall Street price target, and of course Buffett recently picked up a position. Both NVIDIA and Google growing their revenues well, with NVIDIA growing faster. However, of course, we should think about Google and Alphabet as more of a conglomerate. They have many business units and they've got a lot going for them, and they are extremely diversified. Now, if you look at the price action on this tells you a lot about what's going on. So this tells you a few things. This tells you that the market sees Google's progress perhaps as stronger than NVIDIA's. The market is very excited about the TPUs, and some smaller topics like Buffett picking up a position is just going to help that positive momentum. But it's been an absolute banger for the last year, and you can see that massive shark kind of mouth opening here in the chart, where over the last year Google's up 87% while NVIDIA's up 27.53. So I would say it's a mix of really positive news from Google. All year they've really kind of been pushing the pace, and then you've got NVIDIA, and I think the negative narratives around NVIDIA and OpenAI have been gaining some traction. You have more and more institutions, individuals, news stories, news outlets, whatever, bringing up potential flaws in some of the forecasting and some of the obligations that these companies have put upon themselves. And there have been obviously high profile names betting against NVIDIA, which, at this moment in time, it's very much too early to say. We do need to see how this revenue continues to play out, and do they hit the targets that they expect to in the coming kind of 3 years. And that's the same for a number of the AI names, probably most notably OpenAI, which I think is receiving the majority of the negative press. And because they're not public, perhaps in sympathy, Microsoft and NVIDIA might be the two names most connected to OpenAI's social narrative for market participants. But anyway, I'm going to leave you there, and it's been great to chat about these topics. Very interested to see how the end of the year plans out, but I think for the most part, it seems like people are shutting down a little bit and kind of taking a well-needed break and reflecting on what the coming years looks like. So have a great week, and we will speak to you next time.